Okay, everybody, welcome. This is our commercial division by Elite International Realty. Today, we're going to be talking a little bit about uh, the company itself, Elite. We're going to be talking about our commercial division and, of course, the products we offer. So let's start by introducing ourselves. I'll introduce myself. My name is Daniel Lajkovics. I've been living in the United States for 30 years. I went to Florida International University, business administration and marketing. And I've been the director of sales at Elite International Realty for the past 20 years plus. My father is the founder of the company. As soon as we moved here, we started the business, and we have been doing this ever since we moved to Miami. We have 80 agents, out of which we have a small portion of our agents that make up our commercial division. Most of them are here today. So I'm going to go around in order. I'm going to start with Alex Rosenbuch. Alex, welcome and thank you for being here. Please tell me briefly about yourself, your education, and your experience, your background.
Well, Daniel, I went to the University of Miami. I have a degree in economics, and I've been doing real estate for more than 14 years already. So, and I deal mostly with investors. So in commercial and in residential. But lately, in the last 4 years, most of my clients have decided that they're more interested in the commercial section of real estate.
Perfect. And we're going to go a little bit in that with Alex in a little while. Fernando Muharan, thank you for being here. Welcome.
Thank you, Danny. Thank you, Danny. So I've been here in the US since 91, and I've been working in real estate for about 10 years now, mainly doing residential, and for the past few years, commercial as well, especially the multifamily area of it. I think that's
and we're going to go into that as well, also multifamily very soon, because we're going to talk about different products. Rosely, welcome. Thank you for being here.
Hi, my name is Rosely Machado. I moved to Miami in 2012, sorry. My background is in finance. I did business administration, and all my career are in the financial markets, investing other people's money. So moving to Miami, I decided to another type of investment. It's real estate investment. And I joined Elite in 2016.
And Rosely, she's been working for major banks in the past. She used to manage very high net worth portfolios. So she's, also very qualified to be in our division. And we're going to move to Isabel Salcedo. Isa, thank you for being here today. Appreciate it. Tell us briefly about yourself.
Thank you very much. I am from Venezuela, and I've been here since 1982. And I've been in real estate for 19 years now. I have a background in business as well as you. I graduated from the same university with the same degree. And I work for the commercial division in the background. I kind of the helper of all the agents right now in the commercial division.
That is correct. She does the support and she knows all the systems of the commercial division. And finally, Fernando Leal, thank you for being here today. Welcome. Tell us briefly about yourself.
Thank you guys. Thank you everyone. I'm from Brazil. I went to the Western Michigan University, graduated there with a business degree. I started at Elite in 2012 in the residential side. And due to demand, a lot of our past clients are now requesting commercial properties. So now I'm a hybrid agent. I do both residential and commercial. And my focus is primarily warehouses, small to medium sized warehouses.
It's quite common to do both commercial and residential, although I think the commercial side is a bit more challenging, and we're going to talk about that as well, the differences. I'm going to go ahead and open my presentation, mute everybody so we can have a better dynamic of the presentation. Hope everybody can see it. And this is what we're going to start. Basically, we're going to talk about income producing properties, which is quite different than a primary home when you buy to live, a vacation home where you buy to rent out when not in use. These are strictly income producing properties. You're going to buy a property and you're going to generate income. And there are various properties that you can buy within that model. So we're going to go to the first slide where we talk about Elite International Realty and its experience. So we have 3 decades of real estate experience in Florida, and we would like to believe, and we truly believe, that experience counts. I mean, it's a saying that we use, and we take it to heart. After 3 decades, we've been to crisis, we've been to ups and downs, good times and bad times, and we survived. And I think that experience, we share with our clients in trying to have them make the best decision with us. So when I moved to Florida with my father, it looked like this. That's Miami Beach in the 1990s. A lot of retirees were living here, and that was just a fact. I mean, they would come here to live, retire the last years of their lives. And then, we have a city being built in the early 2000s. And this is all, Elite was also following these trends. And then we have a revolution happening in 2010. And finally, in 2020, we're a true global city. And, that's where we're at today. We are truly a global city. These are the type of investments that you are able to buy from our commercial division. We offer other properties. This is our focus. We have strip centers and malls. We have multifamily. We have warehouses, hotels, vacant land, and triple net. I think they each serve a purpose to different clients. It's not one size fits all. That is why we have our agents focus on a specific topic, although we have weekly meetings. So all of our agents are very aware of every type of property out there. So maybe Rosalie is going to talk to us a little bit about triple net today. Doesn't mean she doesn't know anything about warehouse or multifamily. On the contrary, we're all very aware of every type of property. We just focus on one for meeting purposes so we can share more information on a property. So let's go to Rosalie. I will unmute her so we can, briefly talk to her about commercial properties, and we're going to focus on her case with triple nets. I don't know if you're able to unmute yourself, Rosalie.
Okay.
There we go.
Okay.
Now, my question to you is, so, you've been studying a little bit of triple net properties. Can you just explain the triple net concept?
Well, triple net is a commercial property, but the difference and the advantage of this type of investment is that there is a long-term lease contract attached with the real estate. So, for example, you bought Burger King, and you bought the tenant inside this real estate. So right. You have a tenant and a contract with 10, 20 years. So this is the advantage. This type of contract cannot be terminated. So we are sure that we receive monthly the rent till the end of the contract.
And I think that's a very important point. When you're looking for security, and you're talking about residential, a lot of times there is a cancellation clause or a termination clause, which most, if not all triple nets, they do not have that, which makes it, I would say, a very secure asset.
Exactly.
And how do banks feel about that when you're looking for financing?
They are very confident about this type of property because they have the contract. So vacancies, it doesn't exist at all. So you have this type of contract, long-term contract, that is a guarantee that the bank could receive the loan. So it's easy to get a loan for this type of property.
What kind of return can people expect when you're talking about a triple net property?
It's a very good return. Nowadays, it's about 5 to 6%, depends on the property, depends on the guarantees. but it's a very good return compared with we have nowadays in 10 years bonds, for example. In the United States, we have less than 1%.
Perfect. That makes sense. I mean, so you're talking about a very secure property with a very decent return. Banks love to finance. I've seen lately my experience with triple nets, you know, an LTV of 60 or 70 for domestic clients. Maybe we can try it for foreigners, you know, 60 or 50% financing an LTV. So it's easy to finance, a good return. And just to finalize, I want to know your feelings about the US economy, maybe the global economy, and how can that trend help the demand for triple net properties? Do you think money will come to commercial real estate eventually?
Yeah, I think it's compound a portfolio because it's secure, it's safe. You have more visibility, and this type of investment, important to say, you have liquidity, because pension funds, they need to rent to make this type of investment. So you have liquidity. If you need to sell, you have a good market for this type of investment, and you have no maintenance. So you buy this type of property, and you have only to worry about to receive every month your rent. So you don't
Danielle,
have
can I chime
maintenance.
in? Can I chime in real quick here, Danielle, about triple net?
Of course, please.
Talking about this pandemic, and I'm talking about is triple net a sound investment? You know, I sold a couple triple nets last year, and one of my clients in particular, when the coronavirus started, his main concern was, and he called me. He said, "Are they gonna keep paying my rent every month?" And believe it or not, they never stopped. They kept paying February, March, April, and they're paying every month throughout this whole pandemic. So it was a Jiffy Lube, and as you know, for the last 2-3 months, nobody has been driving around, but their stores remain open, and they kept paying on a monthly basis. They never delayed or not paid the rent. So that tells you
I
right
think
there
that's an
that a business,
important point. You
yes,
know, because we
yes.
always talked about, you know, that triple nets are recession proof. Why do we say that? Because we believe that even during recession, maybe especially during recession, you know, depending on the type of tenants you're looking for, and we try to look for, you know, usually tenants and concepts that do not compete with Amazon or the internet. And of course, we're trying to find, you know, that middle class type of tenants. So QSR, which is quick service restaurants, are in our radar all the time. And you know, we believe that in a recession, people tend to eat more in those places, so they have more demand. And so we always said, you know, it's a recession proof, and now it seems like we can almost safely say it's pandemic proof, because you know, I would say that 75 to 80% of the triple nets we sold in the past few years, and it's a lot of them to our clients. Now, 75 to 80 made the payment on time. The 15 to 20 that did not, they actually negotiated very formal, and we have a written agreement where they paid a portion, and a portion is going to be paid within the next couple of months, or maybe they're going to add years to the contract, and those were the exceptions. So yes, in general, all of our clients were getting paid. The ones that did not, they had some type of very formal agreement. They just didn't simply stop paying the rent. So that makes it a very secure. It goes to the point that Rosalie was saying, it's a very secure investment. And Fernando Leal just brought up, you know, another reason for it. You know, we are living during, you know, a unique times, and most of our clients still got paid the rent, which is important. So triple net, the first, and you know, the cost of the property taxes paid by the tenant, the insurance is paid by the tenant, and any type of maintenance, you know, roof structure, it's all covered by the tenants, which leaves no maintenance and no cost to the landlord. And that's what we love about it. And I think that's what banks love about it. So thank you, Fernando, for, you know, making that point. And Rosalie, you know, thank you for talking to us about triple nets today. We hope to keep in touch with you and see you soon. Everybody is home, as you can see. Most of us are home. And be safe. And Rosalie, and we'll, you know, I'll come back to you towards the end. Let's see what we have next. We have multifamily. So let's talk a little bit about multifamily with Fernando Muharan. He is part of our commercial division. Now, this is a division that I'm very proud of. I love all my agents, and I'm especially proud of the commercial division because, um, they reflect the mix that our company is: multicultural, multi-nationalities, multi-backgrounds, and it reflects elites backgrounds, elites agents, both residential, commercial, and reflects Miami and Florida in general. This is we're from different parts, so we speak Spanish, Portuguese, English, Hebrew. We have different languages in our commercial division that is spoken, French. So Fernando, welcome again. And we're going to talk a little bit about multifamily. What is the difference between multifamily and a regular residential condo that you simply buy one condo?
Okay, Danny. The main thing is multifamily. You're buying actually one real estate property, but you do have more than one tenants. So you have more than one source of income. What's very interesting about multifamily has been a hot topic lately, especially with the pandemic, because of the unemployment rate rising so much. A lot of the investors and owners were very concerned about multifamily. Now, surprisingly enough, for the months of April and May, the National Multifamily Housing Council, which is who tracks the rent payments on a weekly basis for professional managed buildings, based on a sample of 11.5 million units, showed the very good news of about 92% of the tenants pay their rents, which is only about 3% less than the same period of last year. So that's something very interesting and very surprising for a lot of the people that were concerned with all the pandemic. Besides that, like I said, the nice features which I love so much about the multifamily is that you're not relying on only one source of income or tenant. You have multiple tenants. Another point is also in South Florida, especially with the increase in the rent prices, and also we see a higher demand for affordable housing. And with the higher construction costs and also the higher cost of vacant lands, it often doesn't make a whole lot of sense for builders to build affordable living. So right now we see a lot of, in my opinion, we see a great opportunity when we see the older buildings where there are potential to renovate the units, maybe one by one, while maintaining most of the income that's being generated. And once those units are renovated, you get the chance to get new tenants with higher rents. This way, you are increasing the income as well as the cap rate, which means an increase in the sale price in case the owner ever decides to sell it. So those factors, I think it's what really attracts me, and I think what makes the multifamily such an interesting type of commercial investment.
I think multifamily was the asset that a lot of people were looking at when the unemployment numbers, started to come out. Because, although there was huge unemployment, people somehow knew that maybe other types of assets would get, the rent and the payment on time. Now, multifamily was a big question. And yes, I read also, a lot of reports, and, people are very optimistic for two reasons. One, most of them got paid, and the ones that did not get paid, somehow they're trying to work out payment plans with them.
Exactly,
So
deferrals and yeah.
Exactly, deferrals and abatements. So there is negotiations happening now. We're not saying that every multifamily owner is happy out there getting paid, but I think it fared much better than people expected, because now we're talking about one tenant, one human being being liable for the contract. Maybe that person does not have a job now. Yes, the government stepped in with the stimulus package, and I'm sure that helped and made people keep paying. But I think this is the asset that surprised most, especially people that are more involved in the industry. There was a huge concern about getting paid. The numbers you just gave us, it goes to show that this is a very active asset. And you mentioned about the renovation. And I think, and we talked about this in the past, if you are a foreigner and you want to buy vacant land here and you want to develop something in the United States, and I think Fernando Moharan would agree, maybe buying a multifamily could be a good first step to test the waters. Don't you agree?
Yes, yes, surely. I mean, there's way less complications, especially for someone that wants to break ground here, start something new, remodeling something with less complexity and also lower costs. It's a way safer way to begin, I would say.
Right, I agree. I mean, you're buying something that is already, fully developed, and you're going to be dealing with less, remodeling work. You're going to be dealing with work that can be mitigated, meaning it's
And
easily
also keep
controllable.
in mind, Danny, you can also do unit by unit. You don't have to do everything at the same time. So the good advantage on this case is, let's say you have a 10 unit multifamily, you're remodeling one, you still have the income for the other 9 while you're doing the work. Then you can put a new tenant on that unit that's already remodeled, paying a little more, and then do one by one and keep on having the income. So
I
that's
agree.
one thing. You don't have to stop your income in order to build. Like when you're building something, you don't have any income until you're done and have all the tenants in place. So
And
that's one advantage of
in
it.
the past, we talked, a lot of our conversations went straight to our international buyers, especially Latin America. And now we realize that there's a huge demand from the domestic US market. And I think multifamily could be a great asset that we can turn to and offer our domestic clients, our local clients. And reason being is different than, there's a lot of differences between triple net that we just talked about a multifamily. And I believe one of the major differences is the starting prices. I mean, you can start at about $250,000. You could buy a duplex. I think we talk about a price of between anywhere between 80 to 90,000 to 100 to 120,000 per door. So if you're buying a triplex at 100,000 per door, you're going to be looking at about $300,000 investments. And final question to you. So we talked about the starting prices between 2 to 300,000. Income producing. Are you able to finance those through lenders and financial institutions? I think that's an important point.
Yes, yes. There's usually finance available. It all depends, of course, on how, if we have the history, the income history on the property. But yes, it's possible to finance.
And I think the important point we want to make here, and this goes to most, if not all, of our assets. Once you're talking about income producing, lenders are usually concerned and they look closely to the tenant and to the income in order to try and analyze the asset with you. And I think that's something that you have to keep in mind. The location is important, but they are also looking very strongly at the tenant's capacity to pay, and also quality of the tenants and the actual income. So based on that single income number, they have their own ratios they go through and try to come up with the programs they can offer our clients. So very informative, Fernando. Thank you very much.
Yeah, sure, my pleasure.
Appreciate that. Let's go to our next agent, Alex Rosenbuch, and he's going to talk to us a little bit about the profile of the investor and the best approach to offer income producing properties. Now, when we talk about approach, and it's important to notice that, we're not here just to make a commission. That's why I call this best approach to selling commercial real estate. What Alex represents and what he's going to talk to us now reflects how not only how the commercial division deals with our clients, but it reflects how the entire company, from the directors, the president, the founders, through every single agent and staff. We're here to help our clients make the best deal possible, regardless of how much commission we're making. If we have to make less commission in a deal, if we have deals that pay less to us, they are less attractive to us financially, we're not going to stop offering them. Our clients are the number one priority. And I think that's what Alex can tell us a little bit about his approach.
Our clients are for the long term, not for the short term. So obviously trust is very important, and we always look for the best interest of the client. That's our job. So We
I've never
only,
seen anyone does this better than Alex, and he can tell us, when he looks and analyzes an asset and a property to one of our clients, it's like he's looking for him and his family, right?
it's like if I was paying for it, yes. Correct.
And
I
sometimes it's
take
hard
it very
because
seriously. Yeah.
sometimes he looks at a property and says, I'm not going to offer that. And when I met him initially, I said, let the client decide and offer them. But he likes to do that initial filter, and he doesn't want to waste his client's time. And he does it very well. He looks at properties, he analyzes them, and he comes with a decision whether to present or not. So once he's presenting to that client, he's creating loyalty. That's what he's doing, and that's what I like about him. So Alex, tell us a little bit, how is the mindset of a client looking to buy commercial different than a client looking to buy residential? How is the mindset of the agent offering and the client looking for the properties?
What we're seeing is many of previous clients, actually current clients that used to have residential properties, are now turning into commercial properties because commercial properties, as Rosely mentioned, and it requires less involvement and less maintenance. So many of our clients, they don't live in Miami, and they don't want headaches. Sometimes with residential properties, things broke inside the refrigerator, the AC. Whereas with commercial, depending obviously on the type of commercial property, but generally speaking, it requires less involvement. In addition, there is less turnover from tenants in the commercial with commercial properties. So just to get you to give you an idea, the leases that we have with offices usually range from 3 to 5 years, and the leases that we have with warehouses range between 5 to 7 years. Now, even better with the triple net that Rosely was mentioning, leases, sometimes our clients are usually looking on leases that have good tenants staying from 10 to 20 years. So that's basically one of the biggest differences between residential and commercial, and why our clients like it so much. So the other reason is it's a steady income. So when you have longer tenants, it's a steady income. And the other thing that we're seeing from our investors is the capitalization rates right now. They're comfortable with 5 to 6% rates. 5 and 6% capitalization rates, cap rates. Now, with the current low interest rates, we can increase these rates to 6 to 7 to 8% on what we call cash on cash returns.
So Alex, what Alex talking about here, we highly recommend and encourage our clients to leverage, their investments. And that can be done through many ways, various ways. You can go through a lender and, collateralize the property, or you can do what we call portfolio loan or a cash to cash or back to back loan, or using your own cash as collateral. So there are many ways that you can, leverage. But yes, you can easily get to 7-8% when you're leveraging the cash on cash return.
Right now with these interest rates, yes. And finally, as Fernando was talking about multifamily, these tenants are yearly tenants because it's more the residential tenants, but you have the diversification of several tenants. But what our clients really like about the multifamily is that they can add value to these properties. So what we're seeing is that as the tenants move out of the properties, the investor makes improvements, they increase the rents, and obviously increase the returns, and also provide appreciation to the property.
So, Alex went, directly to the point where, the mindset, is usually a bit more analytical, both from the client's perspective as well as the agent's perspective. Yes, we're looking at numbers. It's a little bit less emotion involved, and it's more rational decisions. And that's where Alex understood when he joined the commercial division. Emotions are still there because you're dealing with people's money, but it's a lot more rational than emotion. Now, we're not here by no means to compare residential to commercial, and the heart of the origin, where the commercial division started, our origins, it's a complement to the residential clients. We had residential clients for many years that were buying property with us, and they simply demanded different properties. They said, we love our vacation home here in Florida. We're going to keep it. We're not going to sell it. We just want to add to our portfolio some income producing properties.
That is true. For example, recently I have a client who happens to be, he's a doctor in New York, and he started with a residential property in Brickell, but then he decided to diversify to a medical office, and now he's thinking into probably now diversify again into the industrial, probably a warehouse. So yeah, we try to diversify into different sectors.
That way, we maintain our clients within our portfolio of properties. We don't have to refer out. As long as we have an in-house commercial division like we do, we maintain everything in-house. A lot of the referrals do come from our residential agents, maybe our international partners, abroad. But at the end of the day, we're not here to compete against residential or commercial. We're simply here to present opportunities. And we have clients for all types of properties. We have the clients that come from Latin America and they love their beach house or the condo, waterfront condo. At the same time, the same client or a friend may be looking for an income producing in order to maybe maintain the costs of that property. And that's where the income producers come in to complement the residential division.
And usually the bottom line is that the type of investors that we handle in the commercial division, they tend to be more conservative, and they looking more of a steady income, that requires less involvement. That's basically what.
And going to Rosalie's point, we're not here to tell anybody to get their entire, portfolio of investments and dive into the residential or commercial market. We're saying diversify. Think about what you have in your basket today and how can you diversify that portfolio into commercial and residential real estate, maintain a little bit in the stock market. We're just giving that message. We're not saying sell off everything you have in the stock market, forget about bonds and other financial tools. We're just saying think about how can real estate add value to your current portfolio. And that's what we've been doing for decades, telling our clients, do look at us as a source of diversification. We're not a solution to everything. So Alex, thank you. It's a pleasure to have you in our commercial division, very loyal to your clients, and that makes a big difference in the long run, like you said. And we're gonna go now and talk to Fernando Leal. We're gonna get some input from him for warehouses and his feeling on warehouses. Where do you think the market is going, and why do you like warehouses?
Well, first of all, looks like Alex has a client for me looking for warehouses. So that's good news for me. Thank you so much, Alex. Going back to warehouse, I know Rosely was talking about how the triple net is a sound investment. And I believe that warehouses are also a sound investment. I like to focus on small and medium-sized warehouses. And the reason I do is because during a crisis, just like we're going through one right now, usually someone that has a very large warehouse may have to downsize to a medium-sized warehouse, and someone that is in a medium-sized space will tend to go to a smaller space, and the guy that's actually renting a smaller space may start working from home. So as you can see, I like to focus primarily on a small and medium size. That's where I see most demand. It's also a very easy to manage. A lot of people like to compare warehouses to apartments, and basically what I tell them is, you're buying 4 apartments. You do not need to be concerned with anything inside the warehouse. It's cement and 4 walls. The only piece of equipment that you have in a warehouse is the air condition. So if anything should ever go wrong, that's really the only piece of equipment that you're going to have to either repair or replace it, as opposed to an apartment where you have a wash and dryer, a fridge, and a microwave. Does that make sense, Danielle? As
I
far
agree
as
with
looking at
you.
some of the costs.
I 100% agree with you. I think you're literally looking at 4 walls. Maybe you have what we call multiplex, or a mix of an office and warehouse. But at the end of the day, a large percentage of the property is simply storage. And if you look in the news for the past 3 months, why we're going through the pandemic, logistics became a big deal. You heard about all the people and companies hiring people, and they're also mostly internet-based companies. We heard about hundreds of thousands of people being hired, and most of these, increased demands are also reflected in the increased demand for space to store things. And there's a lot of things we can talk about, what we call the last mile. Those are the warehouses that are very well located, very close to urban cores, where you need to be close to where people are placing the orders, yet you need to pay a little bit less rent. So there's many strategic approaches you can do when looking at warehouses, but the last mile is something that more and more, I think companies are looking to decrease the delivery time. And I think location of warehouses, if you're close enough to a major city, or you're close enough to a major, core, you have a better chance of having more demand. But logistics, is definitely, in my opinion, and I'm sure Fernando shares the same thing, logistics is here to stay.
And one thing I noticed, I took a drive the other day to West Palm Beach, and I took I-95, and you can see when you're driving up there, the demand. You've seen these huge warehouses. They're popping up everywhere. So it's something that you can just basically, depending where you live, just take a drive. And I'm sure that these warehouses are popping up not just in Florida, but in many big cities. The demand is growing, every day more and more. So it's something
I
that you
agree.
can see. It's not just me saying it. You take a drive, and I'm sure that everyone will say, "Oh my God, I drove here and I saw a warehouse going up here, one going over there." So you can see that what's happened to the market.
It's an asset class that we need to look at the next couple of months, because I think demand will increase. And you made great points about some people, yes, that will work from home, but at the end of the day, depending on the nature of your business, you will need to store things, and
Sure,
that's when they'll
correct.
come in.
Yeah.
So
Some
you may.
warehouse, they actually warehouse. You could store stuff, but you can also make office. There was one warehouse that I sold where it was an attorney's office. They made one warehouse into 4 offices. So those are some people that sometimes will downsize to a smaller warehouse. But like you said, if you're storing products, you really can't downsize. So the demand is there. As far as the lease term for a smaller unit, usually you try to get 1 to 2 years. When you get into a medium size, you want to get at least 3 years. And of course, the bigger you go, then it's going to be 5+ years as far as the lease terms.
Excellent. Perfect. Good job helping us understand a little bit about more warehouses. And
You're welcome.
it's great to remind everybody that Miami is, the very well located, close to Latin America, Caribbean. We have over 100 airlines flying in and out of Miami International Airport. If I'm not mistaken, that Miami is the #1 cargo airport in the United States. And of course, Port Miami, our port cargo, it plays a very important role to the United States. So we have a very a peculiar geographical location where we're close to everything in Latin America, Caribbean, and we have all these logistics as far as flights and, ships coming in and out. So that only adds to the point that warehouses are here to stay in South Florida and Florida in general. And finally, I think, I want to go a little bit into, before we finished, we're going to do a future presentation on retail trends, but I want to talk to Isabel a little bit, just get a sense from her, really what she does for the commercial division, because we have all these agents that are relying on her. So I just want to touch base with Isabel. Like she said, she's our support, and she does support all of our agents. And maybe can talk about what are the one or two major tools that you use on your daily routine at Elite to help not only our agents, but ultimately our clients. What are the tools that you use to support them?
Well, we use a system. It's called CoStar, which is a pay system, sort of like an MLS. I would start to say that commercial, we don't have a search engine where everything is. So for me to help them find what the client is looking for, I have to go through first the CoStar, then the majority of the listing agents have their listings in their packets. So I do a between search and PR. When I have a good relationship with this listing agent, I can find things that their clients are looking for. And my role here is to help them find these investment that have the criteria that the agents are telling me. It has to have these and that characteristics. And sometimes it's not easy. Like Fernando was saying regarding the warehouses, I've been working to find warehouses for two different clients, and it hasn't been easy. There is a lot of demand, and I don't see much inventory for the demand that we have. It's very hard, and there is things that we have to do, like make calls the listing agent that sometimes doesn't have listed that warehouse. Same when I help to look for a triple net. Alex has a client looking for a Wendy's. We have search engines that will give us when something come out, but we have also to make calls to find if this listing agent has this particular investment that the client is looking for.
Now, one thing that I see a lot is and this is, I want everybody to be aware of, a lot of the things that we talk about and the properties that we mention, if you go on Google and any search engine, if you go online, yes, you're going to find a lot of commercial properties. Now comes the tricky part. How accurate is the information out there? And how do you double check to make sure they are precise? I think that's the biggest challenge we have, is the not only interpretation of the information, but even after interpreting right, does it actually reflect what you are thinking you're buying, right?
Mm-hmm. Yes.
And how do you do that? I mean, that is, my question to you. Is it based on experience? Is it based on, sitting down and taking notes and spending hours analyzing the numbers? What is your approach?
It is a combination. It is a combination. Is the hours that I spend reading and finding out gives me the experience to find something easier and be in between the lines sometimes to see that something is good or not. Sometimes they tell you, like, for example, it is a triple net, complete triple net. And when you read in between the line, it tells you the landlord is responsible for the insurance and the roof. So it's not a triple net, it's a double net. So we have to read in between the lines, and also the source. Most of the times the reliable sources are good, and the bad you learn to
filter them out.
Yeah, to weed them out.
And I think, so we talked about formal we talked about formal, ways of search, which is CoStar, LoopNet. Those are the tools that we use. But at the end of the day, Isabel, mentioned the main one, and the main tool is personal relationships,
Yes.
and that's what she she has. If you want a specific asset type, she knows who to call, she knows who to trust, and a lot of the properties we're looking at for our clients, they may or may not be listed on any search engine or any tool. So at the end of the day, my experience, very different than residential. Commercial is a lot about personal relationships with agents. You trust the agents trust you. We exchange information and deals get done. That's how I see deals getting done in commercial. It's a lot is being done, without being listed, and that's just the nature. I know Fernando wants to add something, right?
Quick comment, yeah. Isa was saying that she was looking for a warehouse. I had a client looking for a warehouse in the Sunrise area, and there were not many available. But the ones that I did find, I noticed that they're no longer wanting a tenant for short term for 1 year. They all wanted a minimum 3 years. I'm talking for a medium sized warehouse, and they would tell me up front, listen, the price is non-negotiable. So you can see that when there is demand, you can now demand a longer term lease, and you can say, listen, my price is non-negotiable. And basically what you said, it's very hard to find in our area right now. Demand for small and medium size. They're not playing games. If you want the warehouse, these are my terms and this is my price. If you're not willing to pay, I will find somebody else.
So when you start looking at, property owners and landlords, um, you know, positioning themselves that way, non-negotiable, harder and longer terms. I
Mhm.
mean, there is demand, and I think that's true for most commercial assets now. I mean, triple net, we're starting to see a lot of demand back again. Yes, to be honest, and we did during the pandemic, we had a slowdown of people looking, but that's not because the assets were not performing. That's because people were simply worrying about their own health, safety, and their family safety. So it became secondary to look for commercial properties. Now that everything is reopening again in most of the country and globally, the first properties that we have seen demand the quickest are the commercial properties, because people are looking to diversify their global portfolio. And nothing better than being in a commercial property in the United States at this point. I mean, that's how people are feeling out there, whether you're from, Mexico, Brazil, Colombia, um, Asia, Europe. You're looking for security, safety on your money. And I think a lot of money, is coming here. As we open the country and the world, commercial properties have a very bright future. That is just, my opinion, and that's what I've been, reading, um, you know, uh, every article. That's what they talk about. So I'm very confident that we're gonna have an amazing, second quarter of 2020. I'm looking forward to working with all of our clients, our agents. Again, I'm very proud of our commercial division. I'm very proud of our 80 agents in the residential division. We have about 10 people that are staff, so it's a total of 90 people working in our firm. So, we're all out here to help you, our clients, people that have supported us for the last 3 decades. We're happy to answer any questions. We're available anytime, and we hope to see you soon in Florida. So I want to thank, Alex, Fernando Mujar, Rosalie, Isabel, Fernando Leal, and Rafael Romero. Rafa could not be here with us today. He is a specialist in retail, both sides, investment, as well as the management and marketing of, major multinational corporations in retail. So we look forward to having him as well in our webinars in the future. So once again, thank you guys for joining us.
Thank you.
I think this was very productive, to the point. I hope everybody enjoys. And I'm going to unmute everybody so we can say our goodbyes. And I hope to see all of you soon in our office. We are physically open. and anybody is welcome to come and visit us, our clients, with an appointment. And our agents, of course, we're all responsible. We are respecting the 6 feet distancing. We're respecting the number of people that can be in the office at the same time. And it's been a great first 2 weeks of reopening, and I'm looking forward to more. And I hope to see you soon. Thank you,
Thank you
guys.
very much, Danny.
Sounds
Very,
good. Bye,
uh,
guys.
very
Thank you,
good.
guys.